Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, October 16th, 2013. I'm Bill Duryea with Follow the Bots. After pulling back to 1690 during yesterday's session, S&P futures retested support during the overnight Globex session and traded back up at or near the afternoon high. Prior to the open, the S&P sold down from the high and pulled back to 1697. The market traded in a narrow range before auctioning back up to 1702 at today's open. During the 30 minutes where the market paused at the 1702 price level and traded in the narrow, high-frequency computerized market maker algorithmic pattern, a buy-side execution sequence developed, and the S&P traded above, and the S&P auctioned above yesterday's high and traded up to the September 19th low at 1713. The buying interest continued, and the S&P rallied up to 1717 before the computerized buy programs ceased executing buy-side trade. The market made a modest pullback and auctioned back down at or near the previous day's high at 1709 and auctioned back up to today's high at 1716 into the close. The next known resistance level above today's settlement is located up at the September 20th high at 1720. Above the 1720 high is the multi-year high at 1727. For a detailed look at today's market developments, we'll turn our attention to the 5-tick range chart. I've numbered each of the trade opportunities that developed during today's session, and we'll go over them one by one. First, the retest of the low. Notice that there were no sell programs associated with the retest of the low at the open of the Globex session. The digital filters that you see overlaid on this chart, which appear like moving averages, turned up off the low. The digital filters are computed to calibrate the uptick-downtick sequence ratio. So as the market auctions at the bid and the offer, the digital filters indicate the slope of the supply and demand curve. Notice the exponential characteristic associated with the up move. The longer-term filter that you see here is called the Kalman filter. The Kalman filter is another one of the algorithms that we use in developing our market structure model. When the S&P auctioned back at or near yesterday's high, the computerized trading programs ceased to execute to the buy side. High-frequency selling accompanied the retracement up to 1706. The digital filters indicated that the execution sequence turned down, and the S&P auctioned back down to 1696, 1697. During the pullback to 1697, the sell programs ceased to execute to the sell side, and the market activity turned flat. When the S&P auctioned up off of the 1697 price level and paused at or near 1702 prior to today's open, the trade execution sequence narrowed once again. The pattern that you see here, where the market auctions up 2 points, pulls back 2 points, auctions up 2 points, pulls back 2 points, is the standard pattern of the high-frequency electronic market maker. On each of the subsequent downticks, the computerized sell programs ceased executing to the sell side. During the narrow market maker algorithmic sequence, the digital filters indicated the uptick, downtick, bid-ask, bid-offer ratio turned up. Notice the exponential characteristic of the digital filter as the S&P auctions up to the prior day's high and trades up to the September 19th low at or near 1713. On the initial probe to the September 19th low, the buy programs paused and the S&P pulled back to what was the prior day's high. On the pullback to the prior day's high, the computerized buy programs once again began to execute orders and the S&P traded back up to 1713 and went on to auction up to 1717, just shy of the next potential upside target at 1720. When the S&P traded to 1716, 1717, the computerized buy programs waned. High-frequency responsive selling accompanied the initial probe to 1717. During the subsequent retest of the high, buying interest faded, and the S&P once again traded back to retest support at the prior day's high. During the pullback to 1709, the computerized sell programs ceased to execute to the sell side, buying interest returned, and the S&P auctioned back up to retest the high at 1716, 1717 into the close. Coming into Thursday's session, the next known resistance level is located up at 1720. Above there is the multi-year high at 1727. Minor support is located at the previous high and the pullback level during today's session down at 1709. There are two other minor support levels located at 1702 and down at 1697. Near-term support is now located at 1690, yesterday's low and the overnight Globex low. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.